All right, so today we're taking a deep dive into NTPC Ltd. A major player in the Indian power scene, really.
Yeah,
I
definitely.
know you like to get a handle on these complex topics, so we're going to break down key insights from, well, all sorts of sources we got here. Reports, analysis, even some recent news stories, all about NTPC's role in India's energy, landscape.
Right.
We're looking at consistent dividends. They've got this move into green energy and even a few regulatory bumps in the road to explore.
Yeah. What's interesting to me here is that NTPC seems to be kind of like in a transition phase, right? Well,
Yeah.
going through their financials, of
Yeah.
course, but also like what those numbers tell us about bigger energy trends in India and even globally. So,
Okay, yeah. Let's unpack all that, starting with the basics,
right.
right? NTPC stands for National Thermal Power Corporation.
Mhm.
And as you might guess, their core business is power generation and distribution, like keeping the lights on across India, primarily by supplying those state utilities. Now, their screener overview shows a massive market cap, over euro 3,058,098 CR. Stock price is currently at 369, with a dividend yield of 2.10%. That's definitely catching some attention. But then there's the ROE, which sits at 13.5%.
Yeah, that ROE is something to keep in mind. It kind of gives us like
Consequently.
a sense of how effectively NTPC
Yeah.
is using its investments to actually,
Yeah.
generate profit. And 13.5% isn't bad, but it's not stellar
Right.
compared to some other players in the market,
Yeah.
which, it might raise some questions about their capital efficiency.
Yeah, that's a good point. Now, Screener also highlights some pros and cons, and one pro that jumped out right away was NTPC's impressive dividend payout, a consistent 39.5%.
Yeah.
That's pretty remarkable, especially considering, current economic conditions. But we got to address those two cons. First, there's that lower ROE we just talked about, and second is this potential for this thing called interest cost capitalization.
Right, yeah. Interest cost capitalization. It's basically an accounting practice where companies will add the interest expenses incurred on financing, big projects, to the actual cost of those projects,
Yeah.
rather than expensing it immediately on the income statement.
Okay.
And while this is allowed under certain accounting standards, it can make a company's profitability look higher in the short term.
Yeah.
But it also means that those interest costs will impact profitability down the line.
Right.
So investors need to be aware of that
Right.
when they're, evaluating NTPC's financial health.
So for investors, understanding how NTPC is managing these accounting practices
Yeah.
becomes really important.
Yeah, exactly. This is where things get really interesting because it raises these questions about the company's long-term strategy. Are they prioritizing short-term gains at the expense of, long-term sustainability? It's definitely something investors need to think about carefully.
Yeah, for sure. All right, so let's dig a little deeper into NTPC's recent performance. Looking at their consolidated quarterly results, we see an upward trend in their operating profit,
Okay.
which is a good sign. But their profit before tax has been, a bit more up and down.
The fluctuations in profit before tax
Yeah.
could be due to a variety of factors, changes in fuel costs,
Yeah.
power tariffs, even, one-time expenses sometimes. What's important is to look at the overall trend over time.
Okay.
Now, the tax percentage they're paying has been, relatively stable, which helps with predictability. And if we look at their earnings per share, or EPS, been on a steady climb. So
Yeah, that upward trend in EPS definitely suggests that NTPC is creating value for its shareholders.
which brings us back to
There's attractive dividends.
looking at their balance sheet. The consistency of NTPC's dividend payouts over the past few years is pretty remarkable. Even when the Indian economy hit some bumps, they kept those dividends flowing. For income-focused investors, that kind of reliability can be pretty appealing. Yeah, it shows a commitment to returning value to shareholders for sure.
Huh.
But it also raises the question, can they keep up this level of payout while pursuing new avenues for growth, especially with their push into green energy?
Okay, let's talk about that green energy push. NTPC has been making headlines with announcements about renewable energy projects and joint ventures focused on solar and wind power. This seems like a pretty big shift for a company known for, its thermal power plants.
This is where things get really interesting. I mean, there's a global push towards sustainability, and India has set some pretty ambitious renewable energy targets. But can a giant like NTPC, with its legacy in coal-fired power,
Yeah.
really pivot to a greener future? And
Yeah.
what challenges might they face? There are a lot of complexities involved in integrating renewable sources into that existing power grid.
So it's not just a simple matter of
Well, you-
dropping out coal for solar panels.
No, not at all. It requires a massive investment in new infrastructure, building up uh, new expertise, and potentially even a change in the company's overall culture. Think about it. They spent decades specializing in one type of energy production, and now they're trying to become experts in something completely different. It's a bold move, but there are definitely hurdles to overcome.
Right. Speaking of hurdles, we can't ignore those recent announcements about fines imposed on NTPC for not complying with board composition regulations. What are the implications of that?
Well, this raises some serious questions about corporate governance.
Yeah.
For a company as large and influential as NTPC, transparency and regulatory compliance are crucial, especially if they want to attract investors
Yeah.
who are looking for,
Yeah.
ethically run companies. These fines, they could signal potential weaknesses in their governance practices, and that can have a ripple effect on investor confidence for sure.
Right. To fully grasp the impact of these regulatory issues, we need to look at who actually owns NTPC. The shareholding pattern is pretty interesting. The Indian government holds a majority stake at 51.0%, followed by foreign institutional investors with around 18%, and then domestic institutional investors at about 26%.
That ownership structure itself tells a story. Government policies
Yeah.
likely have a big influence on NTPC's direction, and global investment trends could also play a role. It's a complex web of factors that ultimately shape the company's decisions and its future.
Yeah, absolutely. Okay, so that wraps up part one of our deep dive into NTPC Ltd. We've uncovered a lot of information, but there's still much more to explore. In part two, we'll take a closer look at their financials, delve deeper into their green energy initiatives, and analyze the potential impact of those regulatory hurdles.
Be sure to join us for part two, where we'll connect the dots and really start to understand what this all means for NTPC's future prospects.
There will join us.
See you then.
Welcome back to our deep dive into NTPC Ltd. So in part one, we covered a lot. Their core business, those financials, and their foray into green energy. Now let's really dig into those financials, see what kind of story they're telling us.
Yeah, let's do it. Looking at their consolidated profit and loss statement over the past several years, it really paints a picture of, consistent growth. Their revenue has climbed steadily from around 71,518 CR in 2013 to a whopping 178,501 CR in 2024.
Wow, that's a massive jump. Does that translate to, equally impressive profits?
Well, their profit before tax has seen some fluctuations over the years, but the overall trend definitely aligns with that revenue growth. I mean, there have been dips here and there, which is natural for a company operating in a, dynamic sector like energy.
Right. So even with those dips, the overall direction seems positive. What about their earnings per share? We touched on that briefly earlier.
Yeah, looking at their EPS over the past decade reveals a pretty consistent trend of growth. This indicates that NTPC has been successful in translating, its revenue growth into earnings growth for its shareholders.
That's good news for long-term investors. But let's shift gears back to their green energy pivot. It's one thing to announce, projects and partnerships, but actually executing them is, well, a whole different game. What kind of progress are they making on that front?
Yeah, they've been taking some concrete steps.
Yeah.
Beyond just, announcements, they've signed MOUs, memorandums of understanding for some, large-scale solar and wind projects. They've even formed joint ventures with some big names in the energy sector, specifically El Sargentio and ONGC. These partnerships suggest a serious commitment to expanding their renewable energy portfolio.
Okay, those joint ventures are interesting. What's the strategic thinking behind that?
Well, collaborating with companies like Mahagenco, which focuses on power generation in Maharashtra, and ONGC, a major player in oil and gas, allows NTPC to, leverage their existing expertise and resources. This can really help them accelerate their move into renewables and mitigate some of the risks that come with such a, big shift in strategy.
Right. That sounds like a smart move. But you mentioned risks earlier. What are some of the specific challenges they might encounter in this green energy transition?
Well, remember, they're a giant in the thermal power world. They have decades of experience running, coal-fired plants. But renewable energy is a whole different ballgame. The technology is constantly evolving, and there are major logistical challenges in integrating renewable sources into India's existing power grid.
So it's not as easy as just flipping a switch and replacing coal with solar panels.
Exactly, yeah. It'll take substantial investment in new infrastructure, building up new expertise, and maybe even a shift in their internal company culture. They're moving from a well-established area of expertise to a rapidly changing field.
Right.
With its own unique set of challenges.
Right. Speaking of challenges, those fines for non-compliance with board composition regulations raise some red flags. Could this hinder their green energy ambitions?
It's definitely a factor to consider. Investors are paying close attention to a company's ESG performance. That's environmental, social, and governance. These fines suggest a possible gap in NTPC's governance practices, which will impact their ability to attract investors who prioritize sustainability.
So it's not just about financial performance anymore. Investors want to see that a company is aligned with their values, like this sustainability and ethical practices.
Absolutely. And it's not just investors. Regulators are becoming more active in enforcing ESG-related rules. Companies that fail to keep up risk facing damage to their reputation and could even face financial penalties.
So for NTPC, addressing these regulatory issues becomes critical, not just for their green energy goals, but for their long-term success overall.
Exactly. Now let's circle back to that shareholding breakdown we discussed earlier with the Indian government. Holding a majority stake, their policies and priorities will heavily influence NTPC's direction.
Right, so government support for renewable energy will be crucial for NTPC's transition. But what about those foreign and domestic institutional investors? What role do they play in the setup?
They provide capital, of course, but they also come with certain expectations. Many institutional investors are increasingly factoring ESG considerations into their decisions. Well-managed companies that are environmentally responsible and demonstrate a commitment to good governance practices.
So if NTPC wants to keep these investors happy and attract new ones, they'll need to show a genuine commitment to sustainability and take concrete steps to address those regulatory concerns.
Yeah, they can't afford to fall behind. It's all interconnected. Their financial performance, green energy plans, regulatory compliance, and investor relations are all intertwined.
This deep dive is really revealing the complexity of NTPC's situation. They're a powerhouse in the traditional energy sector, but they're facing the challenges of a rapidly changing landscape.
And as we head into the final part of our deep dive, we'll explore the implications of these trends and what they might mean for NTPC's future.
Stay with us. In part 3, we'll tie everything together and tackle the big question. Is NTPC Ltd truly powering India's future?
We're back for the final part of our deep dive, into NTPC Ltd. We've analyzed their financials, explored their green energy initiatives, and, even scrutinized some of those regulatory hurdles they've faced. So the big question, what does the future hold for this energy giant? Yeah, that's the million-dollar question, right? The answer, like most things in business, isn't, a simple one.
No crystal ball predictions then. Okay, got it. But based on what we've seen, what are some of the key factors that could shape NTPC's future going forward?
Well, the global energy landscape is, in the middle of a massive shift right now.
Yeah.
The demand for cleaner and more sustainable energy sources is only getting, stronger. So how well NTPC adapts to this this changing landscape will be crucial for their long-term success.
So their ability to fully embrace and execute on their green energy strategy is critical.
Yeah, it's a major factor for sure. Their recent investments in renewable energy projects, in those joint ventures, are a good start, but they need to move quickly and decisively if they want to be a leader in this space. The competition's pretty fierce.
Yeah, I bet. What about those regulatory issues we discussed? Can they overcome those and maintain confidence of investors?
Well, transparency and good governance are non-negotiable for a company of, NTPC's size and influence. Yeah. They need to address those concerns about their board composition swiftly and prove to the market that they're committed to compliance. Yeah. Otherwise, investors might start looking elsewhere.
Right, especially those investors who are, increasingly focused on a company's ESG performance. It seems like NTPC can't afford to fall behind on that front.
Absolutely. Investors want to see that. Companies aligned with their values. Yeah. They're looking for companies that are not just profitable, but, responsible and sustainable.
Yeah. Now, we can't forget about that elephant in the room. The Indian government's majority ownership of NTPC, how might that influence the company's future direction?
Well, government policies and priorities
Oh,
will undoubtedly play a significant role.
right.
If the government strongly supports
Right.
renewable energy, there'll be a huge boost for NTPC. But if policies shift
Yeah.
or priorities change, it could create headwinds for their green energy ambitions.
So there's a political element to all this as well.
Oh, absolutely. The energy sector is
Right.
intertwined with government policies and regulations. NTPC will need to navigate that political landscape carefully.
Right. So for our listeners who might be thinking about adding NTPC to their portfolios, what are some key takeaways from our deep dive?
Well, it's important to remember that NTPC is a well-established player in the Indian energy market with a solid track record
Yep.
of profitability and consistent dividend payouts. Their move into green energy is a positive sign. But it's
You're
still, early days. And there are definitely some challenges ahead.
And investors need to keep a close eye on how NTPC addresses those regulatory concerns. Right?
Yeah, without a doubt. Transparency and good governance are essential, both for the company's long-term sustainability and for maintaining investor confidence.
Okay, so to sum it all up, NTPC is at a crossroads. They have the potential to be a major player in India's green energy future, but they'll need to make some smart decisions and navigate a complex and evolving landscape.
Yeah,
Yeah?
it's a fascinating case study. Whether NTPC is truly powering India's future is a question that only time will tell. But I think our deep dive has given you, the knowledge and insights to start forming your own opinion.
Yeah, that's what the deep dive is all about.
Yeah.
Giving you the information you need to make sense of these complex topics and come to your own conclusions.
Remember, investing always involves risk and past performance.
Yeah.
Doesn't guarantee future results. It's always best to do your own research, stay informed, and make investment decisions that align with your personal financial goals.
Great advice. Thanks for joining us on this deep dive into NTPC Ltd. We hope you found it informative and insightful.
Yeah. Thanks for listening, everybody. Until next time, keep exploring, keep learning, and keep diving deep.
See you next time.